Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates. We are back. Last week we had some of the best of episodes played, but back in action this week. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Looking forward to another big week here on AusBiz. We're pulling out a format that we've done a couple of times that we're pretty big fans of, which is the long-form interview over 4 days. We had Roger Montgomery a couple of weeks ago that we think went really well.
Yes.
So we're bringing it back for another week.
Yes, by popular demand, we are excited for this week. We are going to be deep diving into an industry that we have briefly touched on and that is going through some pretty interesting times, and that is the semiconductor industry, as well as more broadly investing in Asia. And it is our pleasure to welcome to the studio Sunny Bangia from Antipodes Asia Fund. How are you going, Sunny?
Yeah, good, thank you.
So Sunny is a portfolio manager for the Asia Fund at Antipodes, and as I said, we're going to be walking through the investment opportunities in Asia, as well as doing a deep dive on some of the stocks that are in the semiconductor industry, as well as obviously Watchlist Wednesday. So shall we kick it off?
Let's do it. So Sunny, let's start pretty general. Asia is obviously a massive investing opportunity, some massive markets in there, India, China, chief amongst them. Generally, how would you describe the current investing landscape in Asia, and in particular the tech landscape in Asia?
Yeah, absolutely. Asia broadly has become quite diverse in terms of the opportunity set that you have in Asia today versus 15, 20 years ago. You have some of the leading companies in the technology space now based out of Asia. And most of the markets in Asia, from a technology point of view, are quite insular. So you have, markets like China, which you can argue is a very closed-off internet market. You're seeing some of those kind of characteristics in Korea and a little bit in India. And then broadly, in terms of some of the technology trends, whether they're e-commerce, they're sort of benefiting local champions. So our job is to kind of identify these great companies that have these multiple ways to win with a decent margin of safety and then build a portfolio around them.
What countries are some that are exciting you the most at the moment, or you're seeing some of these big companies starting to emerge? Obviously China, but I'm sure there are plenty of other examples.
Yeah, so look, what's happening in Southeast Asia is quite interesting, not just from an e-commerce point of view, where e-commerce penetration is low, where you've got this big runway for growth, but we've also got quite disruptive technologies coming out as we've seen Afterpay in this domestic market going globally. The buy now, pay later concept is broadly getting a lot of traction across the Asian region, whether it be in India or Southeast Asia. And in our view, some of these big incumbent tech companies are incredibly well positioned to take advantage of that opportunity.
So when you're thinking about investing in Asia compared to, let's say, investing in the US and tech companies in the US, is there any differences in how you approach these markets and these companies, both in how you find them and then how you analyze these companies?
Yeah, sure. There are like country-specific nuances and cultural-specific nuances, and quite broadly, the Asian technology space can be quite domestically focused, which is interesting and an opportunity of itself. So what's happening in China e-commerce today is kind of leading edge in terms of e-commerce trends around the world. So we have this huge concept now called community group buying, where tech companies are trying to access the lower tier cities in China, which they haven't needed access before, but these are big consumer markets now, and interesting e-commerce trends are developing where you actually do group purchases and local and community e-commerce, which is quite different to Western markets. And as I said, it's the nuances of each individual region.
Yeah, that's interesting. So what is the process? I mean, we all know the big sort of tech companies that have come out of China and India and that, the top end of the market, but what's the process that you go through at Antipodes to actually go through the list of companies and find investment opportunities?
Yeah, so look, we are very much interested in what are the big changing and important trends that are happening in Asia. But we are bottom-up stock pickers, and ultimately we're trying to find growing industries, companies that are exposed to growing end markets in great industry structures. But what we think about as multiple ways to win. So we're looking for high quality management teams, which you don't find across every technology company, along with favorable competitive dynamics and growing in markets. So these companies have, in a way, you can think about it as they've got multi-pronged way of winning. And for us, that gives us a level of comfort that we're backing tomorrow's winners.
Now, you mentioned they're finding great management, and as retail investors, it's often hard to assess management because we don't get to knock on their door and have a conversation with them. But I imagine during COVID, that was quite similar for you. You couldn't travel to Asia, you couldn't meet these managers face to face. So we'd love to learn from your experience during COVID and see if we can pick up any tips as retail investors. So, when you were locked down, when you couldn't travel to Asia, what were some of the techniques, I guess, or what were some of the resources you were using to assess company management?
Yeah, absolutely. So obviously we look for incentives. We see where management incentives lie versus minority shareholders. We look for that in alignment. Typically, we want to see management own or an incentive structure that promotes the right outcomes and through if it's stock-based comp, so be it, as long as it has all shareholders in mind. And typically we meet management. Zoom has been this great productivity enhancer. We've been able to meet some of the leading technology companies that we would meet maybe once a quarter, maybe once a month now. So that acts as getting, we actually feel closer to some of these companies because that's what the digital economy has done, has brought us all closer together. So we spend a lot of time thinking about the strategies that management employ and looking for companies that are allocating capital appropriately, and not all companies are. So there are big TAMs in Asia.
Yeah.
And it's quite obvious. So one of the biggest TAMs is the Indian banking system. But there's only really been 2 or 3 Indian banks that have actually generated substantial shareholder returns, and most of the industry hasn't.
And just for people watching along at home who aren't familiar with TAMs, that's total addressable market, and that's just because of the huge population sizes in some of those countries.
That's
Not a lot of
right.
Tim Tams.
No.
Not my best.
Not your best, not even close to your best.
So Sunny, you mentioned that a lot of these companies that you're investing in have a great sort of runway ahead of them, huge addressable markets. Online penetration is pretty low compared to some of the Western markets. What's your investing time horizon, and how do you think about that when it comes to investing in these sorts of companies?
Yeah, absolutely. Look, our time horizon is that 3 to 5 year bucket where we think the market can misprice opportunities. Why is that? In an environment where there's a lot of news flow and we're kind of bombarded with what's happening each quarter to quarter, we can, there could be quite short-term focus in terms of market participants' views. So a bad earnings on a particular quarter might get the market to sell down a particular stock. And the way we think about it is that 3 to 5 year bucket is where our ability of analyzing a business, an industry, can really be maximized, and where some of those structural opportunities can be mispriced over time.
Yeah.
So you mentioned that a lot of these, especially the tech companies, but a lot of these Asian companies in general are quite inwards looking. Over the next 3 to 5 years, when you're projecting the future for these companies, do you expect them to sort of break out from their domestic focus and challenge some of these, I guess, US tech companies in markets around the world?
It's an interesting question. So, for example, in China, what's happened is there's a big consumer market in China, and so a lot of Chinese internet companies, if they've cracked that, they've turned into big companies. And so there's always a reward, particularly in China, to focus on your domestic market, get that done right, because the upside is quite substantial. And so what we find is that kind of is happening in other markets across Asia. So Southeast Asia, which is, in our view, going to turn into a $1 trillion US dollar retail sales market. that's a big market in itself to crack e-commerce.
How big is it now?
So we're probably talking about 750 billion going to $1 trillion. And cracking e-commerce there is a big prize to win. And then at the same time, Asia's got this enormous underbanked population. So getting fintech right and getting digital wallets right, payments right is also just an enormous opportunity in itself, as we've learned in China. So in that regard, there's probably not going to be that much. However, there are companies like ByteDance that have,
Bryce is a big TikTok user.
He's a big TikTok user. Don't worry, I'm there with you.
Nice.
Which have basically exported that model globally, and that's unique.
Yeah,
and quite disruptive.
Yeah. How do you think about Western competitors when it comes to analysing these sorts of companies, because they are so insular in their own country? So how do you kind of navigate that? The Facebooks of the world and the Google, etc.
It's interesting. I think, being a global equities business, we can actually see what Asia's ahead in and what the US is ahead in. And in e-commerce, we think Asia's ahead or China's ahead, and we can learn a lot from that and apply it to learnings for us in the US. At the same time, we can see the US is well ahead in digital advertising, and it's by far more advanced market, and take those learnings and think about how that digital ad market will evolve in Asia, or for companies specifically like Tencent, that's in the early innings of the monetization of their platform.
So, Sunny, at Antipodes, you have to build a portfolio of opportunities across the Asian region, and would love to finish this episode by talking about how you think about portfolio construction. Do you have any, rules of thumb around putting too many eggs in one country's basket? Do you try and spread it evenly across the major markets? Do you weight it by population size? How do you think about building a portfolio across all these opportunities in Asia?
Yeah, absolutely. What we love to find is uncorrelated opportunities. And what I mean by that is where the end revenue is uncorrelated to each other in terms of the buckets or clusters of opportunities. So for example, we are positive on some Chinese internet names. And what we'd like is, that's very much exposed to digital advertising, e-commerce in China. But at the same time, we're very positive on the decarbonization of Asia, which is being first driven by China, but I think it's going to happen across the whole Asian region, which is a completely uncorrelated opportunity. So what happens in terms of decarbonization is quite different to e-commerce in China. And that's how we kind of think about constructing these portfolios, creating these 5 to 6 uncorrelated buckets of opportunities through the fund.
Yeah. And I mean, investing in Asia is often perceived as a bit more risky than in some Western markets. Are there any sort of common misconceptions, I guess, that we could pass on to the beginners in our audience that you could debunk, I guess, when it comes to investing in Asia?
Yeah, look, I mean, the thing is with Asia, it is predominantly still dominated by retail investors. The Chinese stock market is 80% retail. Wow. India's got a high retail participation. And with retail investing can create a lot of volatility, which we think is actually an opportunity for fundamental long-term investors. And so I think if you focus on the long-term trends in Asia and think about what the region may look like over the next few years and what industries will benefit, it pays to stay the course. And I think that's one of the key lessons in investing in Asia, that it should be done from a long-term lens.
Well, that brings us to the end of our episode for today, Sunny. We do have 3 more coming up where we're going to be deep diving into some of the stocks in the semiconductor industry and having a bit of a chat about what's going on there, because it's pretty fascinating at the moment. But that is the end of today. If you would like more information on EquityMates, head to equitymates.com. But otherwise, we have a semiconductor deep dive tomorrow. And
that's it, semiconductors tomorrow. And then Sunny's going to be joining us on Wednesday to talk about 3 stocks on his watch list. And then on Thursday, we're going to finish the week with some more individual stock chat. We're going to be talking about 2 of the biggest companies in Asia, Taiwan Semiconductor and Samsung. So join us for the rest of this week. We'll be deep diving on all things Asian opportunities with Sunny.
Equity Mates, from our mates at Spaceship. Investing made easy.